Hey gang, in today's video, we're going to look at technical analysis using multiple time frames, as well as share with you a very important lesson on the reality of trading performance. Hey traders, Akil Stokes here, Chief Currency Analyst at TradingPower.com, and thank you once again for joining me for another weekend review video. In today's video, we're going to be talking technical analysis, looking at a trade on the Euro Yen and showing you how I broke down the trade using top-down analysis and really sharing with you my thought process as the trade progressed. I'm also going to share with you a very important video that came from our Syndicate War Room meeting last week. It was Jason Stapleton talking about the reality of trading performance and what you should really expect if you plan on becoming a professional trader. So it should be a jam-packed video. Now, before we get started, three things. You already know what they are if you've been here for a while. Hit that like button. If you're new, hit that subscribe button, and of course, share the video with a friend. You can share it on Twitter, you can share it on Facebook, you can share it here on YouTube, Google+. We had a few people last week share it inside a trading forum in a prop firm, which is pretty cool. Prop firms looking at my stuff. Hey, so do me a favor, share that video. Don't hog this knowledge for yourself. Do some good for the world and let the world experience it. Now, this video may get a little long. If you're someone that likes to jump around from different segments, do me a favor, or you do yourself a favor, look in the description box underneath this video on YouTube, and there should be little number modules that explain what each portion is and where it starts. So if you don't want to watch the whole thing, go down there, click the number for the section that you want to view, whether it's the Euro Yen trade, whether it's just the talk about equity curves, and it'll shortcut you there. But I hope you watch the whole thing. So let's go ahead and get started. This is a trade on the Euro Yen that started in our live trading room, the analysis, and then as the day progressed, well, you'll see how my mindset changed and how I looked to how I looked to get involved. For you trend continuation traders out there, I would look for a short entry within this area. Again, here's our previous new structure low right here. New structure low. Here's our previous outside return up here. Outside return, retracement, pullback, whatever you want to call it. This is our zone. This is our zone to potentially get short. But let's see, ABCD pattern completion. Let's kind of delete this zone. We know where it's at. ABCD pattern completion should be some Fibonacci confluence there, 1414. Yep, right on a 1414. So minor Fibonacci confluence. I think we'll get a 1618 inversion lining up there, if not a little bit shorter. Right in that area, 1618 Fibonacci inversion. So we can look here. Anything else I can draw off this, guys? What do you think? Drew a ABCD, drew a Fibonacci extension, drew an inversion. Is there any type of Fibonacci thing I can use? Ouch, hitting the microphone again, sorry. Retracement, there we go. Fibonacci retracements, yep, swing high to swing low. Right on a 50%. So we got some Fibonacci confluence in that area, 50% retracement in there. Bang. Question is, look left. Is there anything there looking left? Well, we've got some, hey, look at that. We got a little more than I expected there. We've got some structure here. We've got some structure right in there. So it's not the best structure level in the world, but we do have something. And I'll tell you what, if we go down to a lower time frame, even a range bar chart probably, we can probably look at this structure level right here will probably stand out a little more. Doesn't look like much here on the 15, looking like this, but it'll probably stand out a little bit more as we go down to a 5-minute chart. So yeah, I'd pay attention to this level. If price action comes to this level, this 135.80s level, 135, I would say 135.70 to 135.85, this 15 pip zone. I think that's an opportunity to look for a short. You don't have the best structure there as protection, so you probably want to be a little bit cautious. I wouldn't just put a limit order there, but that's going to be your first chance to potentially get a short. And if not, your best bet is waiting for the B leg of the cipher to be hit and or waiting for the cipher pattern. All right, gang, Akil here. It's about 4:20 on Tuesday afternoon. Typically, I'm not around my charts at this time. I am as far away as possible from the office, but believe it or not, I've got an off day. I've been home watching Champions League matches and, well, really just looking at a few charts as well. Now, my day trading hours end at 11 o'clock a.m. That's a New York time, but because I have a few higher time frame trades on, which I'm actively managing, I have been looking through the charts and just making sure I'm on top of my positions. And what I want to do is I want to go back to a trade we looked at in the live room this morning, and hopefully I'm smart enough to record that or include that video before showing you guys this. But if you remember with Euro Yen, we're looking at this area as a potential reversal zone. We had drawn in, I think it was a 3 drives pattern. Let me just see if I remember. One, let's copy and paste that. Boom, boom. Yep. We had drawn in or an ABCD pattern here. I thought we had a 3 drives pattern somewhere in here. Anyway, it's on the video earlier. This was our potential reversal zone. Not a very powerful zone, but based off our top-down analysis, our higher time frame analysis, we thought that there may be a chance that the market reverses in this zone. And as you can see, the market has rallied into that zone. We've held it, and we started to put in a bearish rotation. And for you guys that are unfamiliar with bearish rotation, essentially it has to do with the principles of how we read a price chart, the higher high, higher close, new structure high, new structure low principles. If you're unfamiliar with that, you need to pause the tape right now, head over to tradingpower.com and go ahead and watch 2 free training lessons. Watch the Into the Gray, watch the Turning Point. It's about 20 hours of video. So maybe you don't want to pause this. Maybe you want to finish this up and then watch it. But if you watch those 2 free training lessons, it's going to give you a good idea of what we're talking about, those foundational skills of reading a price chart. But essentially, here's what happened. And this is what is going through my mind as I look at this chart. Looking at my initial starting point right here. Again, we're coming from a bearish move. We double bottom down here. We get a break above, close above here. And we're starting initial starting point to new structure high or initial structure high. We follow that up with an outside return, new structure high, outside return, new structure high, outside return, new structure high. Now, technically we have a break and close above this level. And I want to keep this video as Barney as possible, as basic as possible. This is also a sign of a false breakout because those gains were immediately driven back. But even if we're looking at that as a higher high, higher close, here's what happens next. We put in our outside return. We would expect a new structure high, right? Just going on with our pattern. However, we don't get that. The market gives us a little bit of a move right here. Some of you will see this as a head and shoulders. 1, 2, 3, right? Head and shoulders pattern. We get a lower low, lower close right here, breaking the trend. Again, new structure high, outside return, 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 fail to make a new structure high. Uh-oh. Lower low, lower close, new structure low. This is a rotation in trend. What I would expect here is a continuation to the bearish side. And this is the same, again, same principles we do with 2618 trades. Now, if we look a little closer, if I zoom in a little closer, there's something else that is here as well. And I'm going to give you guys a few seconds to check it out while I finish up this water. All right. If I take my Fibonacci retracement tool from our previous structure high right here to our swing low, this is going to set up an advanced pattern. This is called a cipher pattern. We're looking at swing high to swing low, X to A to B, B to C, C to D right here at 135.81. So if you're a trend continuation trader, or I shouldn't even put it that way. If you're a trader looking to get short at this level and you were unable to get a reason for entry before, this can be the perfect excuse to get in. You can use this advanced pattern, the cipher pattern completion, as a chance to get into that bigger move on the downside. So I thought it was pretty cool. I always like giving these examples where you can kind of combine the structure-based trades and the advanced pattern trades together, because they are opposite strategies technically, but every once in a while you do get situations where they help each other out, they assist each other, whether it's finding an entry reason, whether it's determining where profit targets go at if you're shooting for, say, extended targets. So always think it's cool to share it with you. I thought this was a great example of reading structure, some basic analysis on a chart, and then throwing in that advanced pattern at the end for you guys that are familiar with it. But the key is, again, that IPDE process. We're identifying, we're predicting, we're making up our mind on what side of the market we want to be on first. Then when we dig deeper into the charts, that decide factor, that's when we can get a little fancy and really start drawing in different predictions for that reason for entry. So thought it was pretty cool. We'll see how it pans out. Either way, again, I can't trade it. My day trading hours are done, so all I can do is watch, but still a pretty cool opportunity, and I think a great training lesson for you guys that are at the point where you're still learning about how to read a price chart, how structure works, and even for some of you guys that are starting to get into the advanced patterns. So hope you enjoyed. All right, guys, back a few hours after I recorded the last part of this video, and just wanted to check on the progress of this, not trade, but the setup that we were discussing on Euro Yen. You can see price action did come up. We completed the cipher right down here, right up here at 135.83, and rolled over to what would be a very pain-free target 1 and target 2. So for someone that's just taking the cipher pattern completion, easy profit right there. We did end up, for looking for the bigger move, what happened was we ended up creating a lower low, lower close, just once again giving us more confirmation that we're looking for a push lower here. And the funny thing is, after creating that lower low, lower close and ebbing back up in the previous structure, this market actually created, let me just double check this. Yep, this market actually created a second cipher pattern completion right in here. So we sort of have back-to-back cipher patterns here on Euro Yen. Now, keep in mind, it is the Asia session. No one's really trading here. So I probably won't see any movement on this until I check my charts tomorrow morning, about midway through the London session. But everything's lining up to still tell me a potential short. I don't know what news is coming out. Maybe that will have an effect on it, but simply going by the technicals, lower low, lower close, another advanced pattern completion. We're still respecting our previous outside return here. I would expect a move to the downside and a continuation in that original move that we projected. So we'll wait and see. Okay, it's now Wednesday morning, and you can see that the trade we were tracking all yesterday on Euro Yen has finally rolled over during the overnight session, giving us a completion of our prediction, I can guess. So very nice way to finish off this kind of video series I was doing of how we were tracking this trade throughout the day. All right, guys. Well, I hope you guys enjoyed that. Again, that's a look at really my take on the markets, and that's something that we do every day in the live room. I got a request from a few traders. Hey, Akil, it would be great if you did videos on, looking at a trade each day and then how it progresses and your opinion on it for the next day. And I said to the traders, hey, I do. This is what we do every day in the live room. We start on the daily chart. We work our way all the way down to the 5 minutes. And then the next day we erase our notes and we start all over again. Repetition. That's the easiest way to become successful as a trader. We just happen to do it in a pretty darn cool community with lots of newbies, but lots of seasoned vets as well. So we have a little fun while we're doing it. Now, this is the part where you're going to want to sit back and listen. This is I'm going to share with you a video from last Friday's Syndicate War Room meeting from Jason Stapleton. I think it could be up to 10 minutes long. I'll see how much I can cut it up, but trust me, it's important. You want to watch this. It gives a little info not only on the reality of trading performance, but also the reason why we start the Syndicate program, why we start the program where we allow traders, thousands of traders, to essentially look over our shoulders day in and day out of the markets. And you
could have built up your risk reward to make that work. And that's probably, just for all of you guys who are new, it's probably important that I talk just for a minute about that, since we don't have any trades out today. The Syndicate is not designed to be a signal service. I put the trades out there and we kind of track them so you can see what the performance is over time. And for those of you who stay with this long enough, the goal is that you get to see it work over the long term, because over the course of a month or 2 months or even a quarter, you can have very bad performance. There are going to be times in your trading life where nothing is going right. Making consistent returns doesn't mean every day making money. It means that you're trading consistently, and over time, you do very well. And the idea behind this, I get a lot of requests, and I've had a lot of requests over the years for guys to come here to Kansas City, to sit over my shoulder and to watch me trade and to really just be here and be part of it. And I tell them, well, number one, you're going to be very disappointed, because it's not like I'm sitting at my desk all day with 18 monitors set up and banging out trades all day. I've got a company to run here, and I haven't done that type of trading for a very long time. Number one, it doesn't fit my personality very well. And number two, it's unnecessary in order for you to generate returns. And so I don't spend 10 hours a day sitting in front of my computer screens. But more importantly, for you to come and sit and do that would be very expensive, because I'd have to shut off everything else that I was doing and just focus all my attention on you. And so for a while, I did offer that to people, but it was, for most people, there were some people who said, well, I think I'm really going to do it. But it was something like, I don't remember where we had it at, like $25,000 a week or something like that. And for some people, that's not a financial issue if they really want to learn how to trade. But even then, I didn't really want to do it, because it's a huge time suck. And you're really only helping one person. And so the more we have expanded the Syndicate, the more I thought, you know what, I want to have something that is designed to be that look over the shoulder thing that a lot of guys want, so that they can see exactly what we're doing and exactly what I'm trading, exactly how I deal with losses, exactly how I deal with profits and winning streaks. And I thought, how great would it be for Akil and I to do something like that, and every day to come in and just sit in like a war room. What typically happens on a proprietary trading floor or at a large fund or a trading floor of some kind is in the morning, everybody gets together and they all give their ideas. The guy who does bonds gives his ideas. The guy who has he's got a certain stock idea that he puts forward, and he says, this is what I'm thinking. These are the levels I'm watching. And they talk about the day's trading. And then everybody goes to their desk. They trade what they can. They do their thing. And then they lick their wounds or count their money at the end of the day. But there's a meeting that happens at the beginning of every trading day to kind of get everybody spun up and aware of what's going on. And I thought, how cool would it be if we set up something virtually like that, where we had like a virtual war room, where every day we came together and we talked about some of the trades that was on the radar. We talked about some of the things dealing with psychology, some of the things that we've dealt with over the course of the last several weeks or several months, and we just had a discussion about that. And then we went out and we did our trading day, and the next day we come back and we talk about it all again and give people kind of a chance to come together and be part of it. And I said, I can post the trades out and we can look at the P&L and we can discuss it, and it'll give people kind of this over-the-shoulder view of what we do on a day-to-day basis. And when I pitched the idea to Akil, he said, dude, that's awesome. We have to do that. And so that's why this program was started. It wasn't started as a signal service. That's got nothing to do with it. The trades are there just so we have something to discuss and to talk about. I remember back at the beginning of this year, we had like a 600 pip month. And I remember telling you guys at that time, because I always try and like tamp down emotion because everybody gets really excited when that stuff happens. And I just said, hey, listen, there's going to come a time when we don't feel like we can do anything right. Yeah, everything we're doing this month is hitting on all cylinders. We just had win after win after win and big wins. You know, and everybody's on this emotional high, and it's exciting to come in and sit in the war room every day because we're talking about all the money that was being made. And I said, just be patient. There's going to be a time when we don't feel like we can do anything right, when we can't make a new equity high to save our lives. And then we came into summertime, and what happened? That's exactly what happened. We came into this like 2-month droll where it was like every day was a grind, coming in and sitting down and trying to eke out a living through trading. But the beautiful thing about this program is you get to see the good and the bad alike. There's no hiding what we're doing here. I mean, we post the trades out. When the trade doesn't go well, you get to see it. And for guys who came in over the last month or so, they may be looking at it and going, man, these guys don't do a very good job. And then when you look at the equity curve, you see what's really been happening is we've hit a stall, but we haven't seen massive swings in equity. So we're doing everything that we're supposed to be doing. We're continuing to trade our plan. We don't change position sizing. We don't do any of those things that cause people to blow up accounts. And because of that, we've maintained kind of a stable equity line. We haven't gone up. We haven't made any huge gains over the last couple of months, but you haven't seen dramatic drawdowns either. And if we can do that, if you can protect capital, because you remember I was talking yesterday about protecting capital. A lot of people talk about how much money they make, but that's not what matters. It's not how much money you make, it's how much you don't lose that matters. You see, if I can have these nice little 600 pip months a couple of times a year, and I can, for the most part, just trade back and forth the rest of the time and maintain a relatively stable equity line, then at the end of the month, I can show a 20, a 30, a 40% return with very little drawdown. That does a couple of things. Number one, that's a pretty good year-over-year return, 40%. You'd be hard-pressed to find that from any other major fund manager in the world. So you being able to do that, that's a benefit to you, is it not? Secondly, the fact that you can do that and you can do it without having to sit in front of your computer for 10 hours a day, that ought to tell you something too. It means that can be supplemental income. It means that can be part of a long-term plan for your, for your financial situation. I know some of you guys want to make trading your full-time career, and that's great. What I'm saying is you don't have to do that in order to be able to make decent returns. And I want to be able to show you guys that through the trading that we do. And then lastly, we've got the fact that we can maintain that price stability and we can maintain that, limit that drawdown makes us very attractive to anybody who might want to give us money, right? Because you're going to need a lot of money to trade professionally. And there's only one way to do it. You can do it the slow way by continuing to increase your balance sheet every single month, not spending any of the profit that you make, being consistent for years and years in order to build up an account that's, $100,000 to $200,000 to $300,000. Or you can do it the other way. You can create a track record over the course of 12 to 18 months, and you can start shopping that. And you can say, hey, look at what I've been able to do. How about you give me a little bit of money? I'll trade it, and I'll keep a little bit of what I make. You can even go over to Main Street Alpha, which is a partner, another company that we started about 6 months ago, and you can start putting your track record online. And if you're good enough, if you have a decent track record and the standard is all there, we will fund you. We will give you money. And it's paid out on a subscription basis, so there's no need for a whole bunch of red tape and regulation. You just simply get a subscription for your program, for what your trading is. You come in and trade every day, and people give you money to be able to have access to that. The roadmap is already there from start to finish, from walking in, not understanding what you're doing, to getting the training that you need, to getting access to the capital that you need once you become a professional trader. All of that is already built in here for you. All of that is available to you. All you have to do is come in, get the knowledge, and get the consistency. So where are you at? I'm preaching to you guys about education because ultimately you're going to earn your education one of two ways. You're either going to learn it the hard way or you're going to go through a training course that's going to teach you what to do. But my goal from the beginning, I remember when I was very first, I was doing this out of my basement and I had like 2 guys that were in my live trading room. And one of the things I told him was, I said, I want to have the biggest, most well-respected trading education firm in the world. I want to be able to take a guy from a point of losing money hand over fist and not only make him profitable, but also give him the opportunity to trade for himself full-time if he wants to. And it has been a 6-year, almost 7-year process to make that a reality. From starting the programs to getting them in line to finding traders and bringing traders through the program who really understood what we were doing, to having the success stories, to building and developing Main Street Alpha to provide people the capital once they become successful. It's taken all of this time to put that together, but it's in place now. There are professional traders who work here who want to see you be successful. There is what I consider to be the very best training program for technical analysis that is available on the market today is here. All you have to do is take advantage of it. This is the first step. This syndicate, this war room, coming here every day and kind of seeing what we're doing is how you start. It's the exposure that you get. The question is, what do you do from here? But I'm very excited to be in a position now to say that we do have one of the largest and one of the most well-respected education companies on the planet. We give away more free information on how to become a successful professional trader than anybody else in the industry. And we have some of the very best training programs on earth. And on top of that, if you come through and you're successful, we can find capital for you. So anyway, I say all that just basically because we didn't have a lot of trades today, and I thought it would be a good idea to kind of share what this syndicate is supposed to be and what it's designed to do.
All right, well, I hope you thought that was as powerful as I did. I know it was long, but I'm going to wrap things up real quick by saying this. If you're someone that's interested in following me and maybe you're not in the syndicate, you're not in the live room, and you just want to see, hey, how's the trading week gone? What was good? What was bad? What was learned? Or maybe even looking at an equity curve. I know a lot of you guys always like to question Akil's performance, and we lay it out right in front of you. I have nothing to hide. I don't use my FX book or anything like that. I track it through my broker. And again, in the syndicate, we share every trade that we take. If you're not in the syndicate and you're interested in just seeing kind of the summary of that, head over to our website, www.tradingpower.com. Each Sunday, I do a blog post essentially reviewing the week. And every once in a while, I'll share the equity curve in there so you can see exactly how we're doing. You can see the good, you can see the bad, and you can see the ugly. Hopefully more good is on its way. But I appreciate you guys and all the support. We got the 10,000 subscribers, no problem. We blew past that number, and it's all because of you. So your support is greatly appreciated every time you hit that like button, every time you share this anywhere, and anytime you leave a comment. So be careful out there in the markets tomorrow. You see these things? Yep. I'm going to be sitting on them tomorrow. No trades, not messing with the FOMC statement and the interest rate decision. If I want to gamble, I'll go to the casinos. So be careful out there, and I will see you guys next week. Until then, plan your trade, trade your plan. Best of luck in the markets for the remainder of the week.